The rules here of the working group says that they might find private solutions whenever possible. And if the SEC is involved in this group, and if they talk to the major market participants, you can picture this working group calling the major brokerage houses, the major banks, early in the morning before the markets open, and talking about strategies to keep the integrity of the market, i.e. Stop you from panicking and selling. So what do? Well, they block all the trading screens. Tuesday, August 6, 2024, Monaco 64, home of alternative economics and contrarian views. So we're going to look at the markets again a little bit here today. One thing I'd like to emphasize is that I do my videos every morning out of the UK around 8 a.m., which is 3 a.m. New York time or Eastern Standard Time. And I usually have a topic about markets, economics, precious metals. And at the end, I cover the markets. Yesterday, I decided to cover the markets as a main topic because things were getting very topsy-turvy. The Nikkei in Japan had dropped 13%, and the US markets were under pressure. How can they be under pressure at 3 a.m.? Well, over the decades, the futures markets where you can trade the indices like the Dow, the S&P, the NASDAQ, and also other futures like currencies and commodities, they've been transformed. It used to be that U.S. futures were traded during U.S. hours, but through the 90s, they extended the hours. They made it electronic with something called Globex, and now it almost trades 24/7. I think it shuts. What time does it shut? Around 5 p.m. New York time, and reopens at 6 p.m. So it's almost a 24/7 scheme, except for Saturday. And when you think about that, it seems like, yes, they've done a great job of making the markets accessible 24/7 to the whole world. But I think there's more than that. They've managed to, or they're trying to kill two birds with one stone. And that is the plunge protection team. That's what we're going to look at today, or what's more technically known as the Working Group on Financial Markets, and whether there is intervention by not just the U.S. government, but regulators and the big banks when markets come under pressure. So before we look into the working group or the PPT, just talk a little bit about what's going on here in the UK. Things haven't improved in terms of the riots and protests. And I wanted to talk about Starmer and Musk. The newspapers are reporting that Starmer had a spat with Musk over riots. And why is that? Well, Elon Musk tweeted or posted that civil war is inevitable in the UK. Yeah, those are strong. That's a strong comment, I have to admit. But and it seems highly unlikely, right? Civil war in the UK. Well, it's happened before. And recently I bought The Fourth Turning Is Here by Neil Howe. I'm still reading it. But don't forget, England, or the UK, and the UK, not the same, of course. England is England. We're pretty much on the same cultural and historic timeline than the United States. Don't forget, the United States of America is a derivative of England, really. You look at all the presidents, they have, most of them have English lineage, the political system. And the fourth turning is about how history repeats itself, how society has like a cycle. And Neil Howe goes back past the American Revolution, which is really a civil war, an English civil war in the colonies, if you want to call it, not here in England, but it was kind of a civil war. And then you have to go back as well to the mid 17th century. There was a civil war here too. So I'm not saying there will be a civil war, but of course, Starmer and the establishment are not happy with Musk. But all I'm trying to say is that they might not have a say in it. That's the way things go. It might be inevitable. So that's all I wanted to say about that. So back to the stock market, to the markets, to the bond markets, to gold and silver, commodities. And most people, a lot of people, especially the Federal Reserve, the people in charge, they always come out and say that the US dollar is the world's reserve currency because we have the rule of law, we have a deep, liquid financial market, it's a free market, and that's why people like investing in the United States. And they are right to some extent about that. But there's been always a lot of speculation, especially after the 87 crash, that the government has been intervening at times that are difficult for the markets in order to keep the stock market from collapsing, because the stock market has become so important. It's become like the tail wagging the dog, which is a bad thing in my opinion. So yesterday I did my video just after 8 a.m. London, and as the day went by the time it was midday here, 7 a.m. in the East Coast, the market started stabilizing a little bit. Gold and silver started getting hammered, even though they were doing really well before that, with the markets massively lower. We started, seeing things calm down. And then we opened at 9:30 Eastern Time or 2:30 London. Yes, markets were still under pressure, but they didn't drop near as much as they dropped during the pre-market, like in the early hours of London, and even on the overnight session in Asia. I mean, I see here the NASDAQ finished down 576, but at one point in the pre-market, it was down 1,200 points, which should have been like 7% down. And also the Dow finished down 1,000 points. I think it was down 1,500 at one point. So you might be saying, well, they didn't succeed in keeping the market from going down, from dropping around 3%, all the major indices. Yes, that's true. But if you follow the markets like I do, being here in London and looking at where things are before they open, you realize that there's something out there that's kind of controlling it. And that's why I talked about the futures market being accessible, which is a good thing. Investors around the world want to access the US futures market, but also the regulators and the people that help them when there are such markets that are very unstable. I was a futures and options broker here in London for over 20 years, so I know how the markets work. And one of the reasons I do a market report here on this channel, is that's what I used to talk about to some of my clients that were based in the US. They used to come in very early, around 7 or even before in the morning in New York. And I could tell them what had happened overnight for them. And that's what I try to do here. So back to the PPT. So it's called the Plunge Protection Team. It's more of a colloquial term, the Plunge Protection Team, of course, but it's something official. It says the President's Working Group on Financial Markets, known colloquially as the Plunge Protection Team, or PPT, was created by executive order. So you see, again, it wasn't passed in Congress or anything, and I think that's a bad thing. Anyway, let's continue. Executive Order 12631, signed on March 18th, 1988, by United States President Ronald Reagan. And I'm not trying to bash Ronald Reagan here, but he's seen as a bastion of free markets and small government, right? The other thing he did is he increased the national debt more than any other president in the last 50 years, percentage-wise. Okay, let's go through it. As established by the executive order, the working group has 3 purposes and functions. A, recognizing the goals of enhancing the integrity, efficiency, orderliness, and competitiveness of our nation's financial markets and maintaining investor confidence, the working group shall identify and consider the following. 1. Major issues raised by the numerous studies on the events in the financial markets surrounding October 19th, 1987, and any of those recommendations that have the potential to achieve the goals noted above. So this was a reaction to Black Monday back then. 2. The actions including governmental actions under existing laws and regulations, such as policy coordination and contingency planning, that are appropriate to carry out these recommendations. B. The working group shall consult as appropriate with representatives of various exchanges. Well, those are the stock exchanges, futures exchanges, clearinghouses, self-regulatory bodies, and with major market participants. Well, those are the big New York banks and the brokers, to determine private sector solutions wherever possible. C. The working group shall report to the President initially within 60 days and periodically thereafter on its progress and, if appropriate, its views on any recommended legislative changes. So this is who is in this group, right? The working group consists of the Secretary of the Treasury, the Chairperson of the Board of Governors of the Federal Reserve System, the Chairperson of the Securities and Exchange Commission, the Chairperson of the Commodities Future Trading Commission, and so on. So before we go further here and look into the PPT, just wanted to talk about what happened yesterday and what made me want to talk about the working group on financial markets, because I'm not trying to say, oh, everything's manipulated, but I noticed that a few people were complaining that they couldn't log into brokerage accounts like Charles Schwab, Ameritrade, Fidelity. I saw some people couldn't log into their Citigroup brokerage accounts. And I saw someone that I follow who said they couldn't put an order to buy GLD. It kept blocking him. And that's normal when the markets get like this. And I also noticed people saying, well, the SEC should investigate this. These people should keep their platforms running. And I thought to myself, well, the SEC is probably part of the problem. And why is that? Well, because the rules here of the working group says that they might find private solutions whenever possible. And if the SEC is involved in this group, and if they talk to the major market participants, you can picture this working group calling the major brokerage houses, the major banks, early in the morning before the markets open, and talking about strategies to keep the integrity of the market, i.e., stop you from panicking and selling. So what do? Well, they block all the trading screens. I guess in the old day, they wouldn't pick up the phone to you. So I think that was part of the strategy there. I know that JP Morgan, for example, they are the banker for the U.S. Treasury. So I'm sure they were busy yesterday morning, not just in the U.S., but here in London. Big operation here in London. The Federal Reserve, Bank of New York, they were probably in the markets. I think they go directly and talk to different primary dealers. So are they going to succeed in stopping further downside in the markets, a possible stock market crash? They could, and I think they're going to keep trying to calm things down, keep the integrity of the market, right? And they might not, though. They might not succeed. And what happens when they don't succeed? Well, then that's where they resort to the Federal Reserve coming in, maybe even the Treasury, with maybe a bailout and more money printing by the Fed, a bailout for the Treasury, rate cuts. So that's what I think is happening. It's not a free market. And I was talking about the fact that it was created through an executive order. And I think it's a really bad idea. And I think it's one of the reasons why we are where we are right now, where we have a massive bubble. And I'm going to put this plunge protection Wikipedia page in the description. You can read the whole thing. But I thought one of the comments here was interesting because they talk about the plunge protection team. It says here, former Federal Reserve board member Robert Heller in the Wall Street Journal opined that instead of flooding the entire economy with liquidity and thereby increasing the danger of inflation, the Fed could support the stock market directly by buying market averages in the futures market, thereby stabilizing the market as a whole. And I think it's one of the reasons why we have wealth inequality. The government and the bankers on Wall Street, they've been bailing themselves out for over 30 years. Can this keep going on forever? Maybe, but most things come to an end. Everything's cyclical, right? So let's check what the markets did today, especially in Japan. It is closed over there. The Nikkei futures keeps trading, but the regular market is closed. And the Nikkei rebounded today, which is not surprising. It doesn't mean it's out of the woods. In the situation where you get crashes, you also get the biggest corrections up, and then you see a resumption of the crash. But anyway, the Nikkei today was up 3,182 points, or 10.2, 10.25% higher. So another massively volatile day, on the good side, I guess. And where are we now in terms of the other markets? And by the way, it's 8:38 a.m. London time. These prices could be completely different when you're watching this. Anyway, we got spot gold at 24.06. It's down about $5. The high's been 18 and the low's been 94. Silver's trading around 26.92. It's down 33 cents or 1.2%. High's been 27.58 and the low 26.58. By the way, just wanted to let you know that I put my fiat currency where my mouth is yesterday. and I added to some of my gold holdings. I gave Oliver Tempo at Gold Investments a call, and I bought some gold, not GLD or futures, the real thing. And I bought it when the market was getting hammered. Well, the first time I bought some, the market was down a bit. Then it got hammered even more, and then I said, oh, I'm going to buy a little more. So there you go. I'm adding on to my stack. So let's see where the stock market is. Well, while the Dow futures is up 230 points, so it is gaining some modicum of positivity. The Nasdaq 100 index is up 229 points or 1.27%, and the S&P is up 51 points or 1%, and that's about 35 points off the highs. What about the currencies? Well, I think the major pair we need to keep an eye on these days is the dollar yen. And yesterday, the dollar got hammered, which is normal, and that's why we had a bit of mayhem. But today, the dollar has rebounded about 1%. We're at 145.50. It got up to 146.39. So I wouldn't put it past the Bank of Japan to have bought back some of the dollars that they sold, because they've been intervening to keep the yen from like crapping out, excuse my French. So the European currencies, while sterling is down a third at 127.30, and the euro is down a quarter at 109.25. General commodities, crude oil, well, that's at 72.69. It's unchanged. That's WTI, and Brent crude is unchanged at 76.23. What about the U.S. Treasury yield curve? Let's see where we are. Well, yields are up quite a bit this morning. The 2-year is up 11 basis points. It's trading right around 4%, and the 10-year is up 8, trading around 386. So the curve is still inverted there by 14 basis points. And that, my friends, is not a good situation when you get U.S. Treasury market yields going down 20 basis points one day, up 10 the other. This is supposed to be like the safest, risk-free market, most liquid market in the world. I worked in the bond markets for 20 years. That's the sector of the markets that I worked in. And I can tell you, I never used to see these kinds of moves back in the 90s and in the early 2000s. So with that, I'm going to wish you all a very good day. Take care. Bye.